Well, obviously, this is a disappointment. This is weaker than expected. We were expecting 185,000 jobs. We actually got 138,000 jobs. Joni Courtney is here. What do you think?
You know, overall, it's really a weak report. Not only the top line number, but we're not seeing movement really in the right direction in many of the other numbers. You look at, wages were kind of flat, right in line with where they've been. We're still only up 2.5% year over year, but very disappointing to see that we actually lost 1,000 jobs in manufacturing, and we also lost 6,000 in the retail sector.
Of 100 economists, this was below the lowest expectation. The lowest expectation of any economist was 140,000 jobs added. When you miss like that, plus the revisions to April, where we only had 174,000 jobs added instead of 211 as initially reported, this is weak.
It's a weak report, definitely. The revisions are really concerning.
And the revisions for the prior 2 months are negative.
This was supposed to overshadow May's weak report, so now we have 2 consecutive weak reports back to back, and the professional and business services only up 38,000. That completely contradicts what came out with ADP yesterday. We did need to see more there.
And healthcare only had 24,000, which even though 24,000 jobs, it's much lower than where it has been over the past few months. Usually we see a very strong number, almost 40,000, 50,000 in healthcare.
And wage growth stagnant, 2.5% year-over-year increase in average hourly earnings. That is
also
not where
below
the economy needs to be.
Well, Charles was here and saying 210,000 jobs off of the back of the number yesterday.
Tomboy nails it again. She nailed it again.
Yeah, she did.
What did she say?
She basically said that look at tax receipts, look at income, it's not there. And by the way, profits, okay, for the first quarter, but it was because of the dollar.
Bank lending slowed drastically in the last 9 months. Delinquencies going up for student loans, subprime autos, credit cards, and even first mortgages. And then the tax receipts, as Maria has pointed out.
But in historical context, most of those are nowhere near alarm rates except for student loans.
But again, it's a trend that she's concerned about.
I'm sorry, Charles.
No, you go.
I have to say, though, what is so surprising is unemployment claims, even if you look at the last 4 weeks, they are at like 45-year lows. And so there's less people that are filing for unemployment on a weekly basis. So there's something, we really have to dig into what's happening in this market. Employers say they have almost 6 million job openings, but we're not seeing the new job growth happening.
Skills gap.
It has to come back. That has to be a part of it, Maria.
Everybody's talking about
skills gap. Big part of it.
Steve Cortez, jump in here. Markets are giving it up here. We were higher by 70 points. Dow Industrials have come off of the highs, showing a gain now of 40 points after this weaker than expected number, Steve.
Right. Well, and Maria, speaking of markets, I mentioned the bond market before the number. It seems that, at least for now, for the day, it seems that the bond market might be right, that the expansion here is slowing. The revisions are what are particularly troubling to me. I don't really mind the headline number that much, but the revisions down to the past 2 months, I think that is problematic. I will say this, if we're going to give sort of an excuse to the number, May was a big outlier down last year. If you remember, it was only, I think, 38,000 jobs added when expectations were well into 6 figures. It precluded the Fed from then raising rates in June of last year. So there may be some peculiarities to the May report, but even with that caveat, there's no way to dress this up. And particularly 2.5% wage growth is just not sustainable for this country. We need 3% plus, which is what we used to get before the recession. But 2.5 allows people, most working Americans, to just barely keep their heads above water. So we need to do better. I think with a tax package, by the way, we will.
Yeah, I think you're bringing up great points. But is there any silver lining, Jack Otter? I mean, Jack, you guys just came out with your new Next, and you're focused on millennials. I mean, is there any silver lining? Are millennials falling out? Or what's happening in this job market? Is there any silver lining? I'm trying to find something positive here.
I'm trying to find something nice to say here. This may be it. In 7 of the 8 last reports, the ADP number has been stronger than the BLS number. Well, if you look over the long term historically, they actually track almost perfectly. So what I'm hoping here is that we're going to see a reversion to the mean and a really strong string of good months from BLS to catch up with ADP. On the downside, this issue of bonds versus stocks has come up. Steve was just addressing it. Historically, the bond market is actually a lot smarter than the stock jockeys. The bond guys are better at math, and they see these things. So I think that is worrisome. To flip-flop one more time, I will point out, I think part of the reason that bond yields have stayed so low is because to the rest of the world, our yields look incredibly high. I mean, for a German where it's, you know, I don't know how many basis points, for the Japanese where they only just turned positive from being negative, they're buying U.S. bonds because, you know, you can get 2.5%, so that looks fantastic to them. That's going to keep our rates
Yeah,
down.
but did something happen in the month of May, Charles?
I don't know. I can't put a finger on it.
Or is this just a creep up, like Tomboy has said?
You know, the good news is that the construction was positive, mining was positive. That mirrored the ADP. Manufacturing, I think that was a great point that was brought up with respect to the autos. Yesterday, Challenger and Gray came out with their announced layoffs, and you know, autos have something like 23,000, 20,000 from Ford alone. They can't sell small cars. So.
Well, the first quarter really rolled over for the auto industry. Something went on in the first quarter.
Well, you know what? It's just the bottom line is they can't build these small cars. It's so interesting because I think it was Ford that announced they weren't going to go with that plant in Mexico.
Yeah, they can't make money on small cars.
It wasn't because of political pressure. It's simply it's just not. They can't make money, and those kind of workers are being laid off. But you know, this is a real tough one. It's hard to understand it without combing through it. It's a huge miss.
Well, one of the biggest questions out of this report is how does this dictate Fed policy going forward?
Yeah.
And so what is going to happen? Will they mention this in their minutes from June? And I think that's going to be a giant big takeaway.
I guarantee they'll say it was, what's the word when the euphemism for temporary? They use it all the time. Anyway, they'll say it was you know, they'll dismiss it. I believe the Fed will dismiss this.
But this means we need fiscal policy.
100%.
I mean, the only way we're going to get out of these
doldrums. They should put a fire under Congress right now.
Every congressman should be ashamed of themselves at these numbers because they're just sitting around and they're doing nothing as they have over the last
few years
over fiscal policy.
Listen to these worker groups, guys. Teenagers, unemployment rate 14.3%. Okay, you've got the jobless rate for blacks, 7.5%, whites, 3.7%, Asians, 3.6%, Hispanics, 5.2%, adult men, 3.8%, adult women, 4%. It's interesting, the teenagers are seeing an unemployment rate of 14%.